Bank reconciliation. Bank reconciliation is the process of reconciling the difference between the cash balance on the bank statement and the cash balance in company records. The bank balance is prepared as follows. Reconciling the bank statement, the first step is to adjust the cash balance recorded on the bank statement to the company's actual balance. This is done by adding the deposits in transfer, which are deposits made by the company but not yet cleared by the bank, and subtracting outstanding checks, which are checks that have been distributed but not cleared by the bank as of the current statement date. Not to forget dishonored checks, which are insufficient funds from the payer's account, also known as bounce checks. For example, deposits in transfer added and outstanding checks subtracted from balance in the bank statement to give actual balance. Once all adjustments have been adjusted, bank balance should be equal to the cash balance to be reported in the statement of financial position. Step 2. Reconciling the company book balance. Adjust cash balance recorded in the company's books for actual cash balance. The company's book balance may differ from the actual cash balance, so the following adjustments are made. The first being the credit memorandum, which is in addition to the cash balance of the bank statement for items such as collection of receivables, the collection of interest on notes or errors made by the company. And second, a debit memorandum, which is a notification of subtraction from cash balance on the bank statement. Example, fees charged for bank services or dishonored checks. So how do we adjust the statement? The credit memorandum has been added and the debit memorandum has been subtracted from the balance per company's records to achieve the actual cash balance. Step 3. Finally adjust the cash balance. Once the bank balance and the company's book balance have both been reconciled, the company's cash balance must therefore be adjusted to the actual cash balance determined by the reconciliations. The third step is to record journal entries necessary to adjust the company's book balance and the actual cash balance. These journal entries are based on the credit and debit memorandum and errors identified during the reconciliation of the company's balance. All in all, here's what happens. Step 1, we reconcile the bank balance by adding deposits in transit and subtracting outstanding checks. Step 2, reconciled company's book reconciled company's book balance by adding credit memorandum and subtracting debit memorandum. Step 3, finally recording journal entries to adjust the company's book balance with the actual balance. Thank you for listening. And that is how we reconcile our bank balances.